fundsupermart.com.
Historically, small cap stocks tend to outperform the large cap stocks during good time. Do you see increasing investment opportunities within the small cap space compared to the large cap segment this year?
Yes, we do see some opportunities in the small cap space. The small cap index obviously have done very well in relation to the large caps. We still see that there's a lot of potential for small caps to perform very strongly, largely because I think the earnings growth profile for small mid-cap stocks continue to be better than the large caps and the broader market in general. But obviously, picking the right stocks will be very important for our performance.
Our central bank delivered a rather hawkish message during the last monetary policy meeting. What's your view on the local monetary policy in 2018?
Yeah, so the policy statement was very hawkish back in December. And as I speak, 2 days ago, Bank Negara raised interest rates by 25 basis points. We think that this is a good move so as interest rates don't remain too low for too long a period of time, because that would induce some other risks as well. Looking at the Bank Negara's policy, we think that they tend to be quite neutral with how interest rates will trend over the short term. So I do believe that they will keep rates on hold for in the short term, and it will be obviously it will be very data dependent. If the economy continues to perform well over the next 2 quarters, the probability of another rate hike will be a lot higher.
If our central bank increases the OBR rate this year, what will be the impact on the local equity market?
Obviously, historically, just on a technical basis, interest rate rises are sometimes not good for equity markets because they tend to sap liquidity and all that, and people have to pay higher interest payments and so forth. But I think if you look at it, the raise in terms of interest rates is on the back of very strong growth, not just for Malaysia, but for the region as well as global growth in general. So there are other sort of bigger positive drivers for the equity market to make it a more positive year. So interest rates alone are not going to be have a big effect.
In your view, which sectors are likely to emerge as the top performing sectors by the end of 2018?
I think that as I mentioned, with the interest rate increases, I think banks will be able to perform well, largely because with higher interest rates, their interest margins are going to be better, and hence it will flow down to the bottom line. We believe that loans growth, although compared to years ago, it's not as strong as before, but I think it will still take up positively, and that would also drive the earnings of financial institutions. We also like the sort of consumer sectors on the back of strong private consumption, and also the infrastructure sectors where we believe that fixed capital investments and public expenditure, government expenditure will continue to be strong, and will flow into a lot of contracts for some of these infrastructure players.
What do you think is the main risk to the local economy or the local equity market in 2018?
Well, in 2018, I think one of the main risks, of course, is the potentially there will be a general election. I don't foresee that there will be a big negative surprise, but obviously there is an inherent small risk as to how well the government will perform. The other major risk that I would see is that I would be very vigilant on is on the level of liquidity around the world, where we're moving towards a cycle where interest rates are being moved up concurrently in many markets. So the unwinding of liquidity could potentially be a small risk to equity markets.